Hey everyone, welcome back. Another week. Hashtag AskRobCo. Hope you're well. As you can see, the sun is just about trying to shine better than last week's torrential downpour. Hope you've all had a good week. Hope you're healthy, safe, and well. It's the priority for everyone. Lots and lots happening in the property, banking, finance, lending, sales world. James is here again. Hi, James. Hope you're well.
Good afternoon.
And we are going to give you some updates, some intel, some content, add some value, and give you some data on what's happened in the last week. Thank you for joining. Thank you for listening. I appreciate the ones that are with us live. Appreciate the ones that watch later on YouTube. Thank you for all of the commentaries, feedback, both positive and constructive. Really appreciate it. Actually, just really appreciate you being here. It's a great platform. It's for you, and it's really enjoyable to have the opportunity to let you know what's happening day by day during COVID, in lockdown, out of lockdown, wherever we are now. All right, I think we should go straight into the intel because we've got some really good numbers, and the trends that we're seeing every week becoming more apparent. And I think let's go a bit generic with the UK details this week from Rightmove, James. Let's start with that, and then I'll go into our more specialist, narrow, deep intel that we collate for you on a weekly basis.
Yeah, so let's start off with, like you say, more of a holistic view of the market and what's happening nationwide across the country. So the demand trends that we're seeing from the Rightmove data, which they produce, are underlying some of the anecdotal buyer trends which we've been bringing you over the last 6 months. And basically, according to Rightmove, the cost gap from moving from a 2-bedroom flat, which may or may not have some outside space, to a 3-bedroom house is at a record trade gap, which averages nationally about £68,000 on sort of trade up value. So in terms of the data, so we've got an average 2-bedroom flat in the UK costs £172,000. Whilst the average 3-bedroom house in the UK stands at £240,000. Now, obviously, that's in the region of £68,000 trade up gap. But what does this mean? So in the last 12 months, on an average basis, this gap has widened by £4,000. And I think it really underlines what we're seeing, that sort of demand for houses and housing stock with outside space. And as time sort of goes on, more statistics are pointing towards all the data and the views and opinions which we're bringing you sort of live from the ground. So another little sort of snippet from the Rightmove data. And obviously in the southeast, just to underline, that trade gap is significantly higher than the national average.
Great, thanks for that, James. I think that leads us really well into this week's intel. So for those of you that are on your computers, handout 1 on the right-hand side, underneath the questions, polls, handout column, click handouts, press the data slide, and it will flash up what we've been sharing with you every week. And let's run through that because I tell you this every week, but I find this really fascinating, the trends and the data that we're seeing, and it is changing every week, but there's some really good patterns. So let's work through that. So the highlighted line at the bottom is where we're going to start. 28th of September, week 39 in 2020. And the key headline trends and data we want to look at is how many properties are coming on to the marketplace. So the flow, the volume coming on stream. We saw a few weeks ago some record numbers hitting the 700. 2 weeks ago, which was after the holiday season, after the August period, it's settled back down now to low 500s, mid 500s, which I think is a reasonable amount. It's where we would have been earlier on in the year. So if you look at the pre-lockdown 11 weeks up until lockdown on COVID, the average amount of instructions were 537, and we're at 517. So we're pretty much on average for the year under normal circumstances, because we've got what we would call COVID adjustments, lockdown adjustments, seasonal adjustments for that period when nothing came on stream that distorts the figures. So I always like to reference pre-lockdown as being the norm. Let's push straight into the sales details, because this is the key number and the key trend that we're looking for here. 184, it's up on last week, just about, not at the record amount it was 2 weeks ago. And again, just to put some context on that, the average pre-lockdown sales figures we were looking at were at the 154 number. So we're well over that, around 20% higher in the volume of sales that are going through on a weekly basis. And that just is a continuation of the message that we're giving you every week. And that is the market is buoyant across all areas. More and more transactions are going through. And obviously we're aware that land registry is massively delayed, whether it's 2, 3, 4 months eventually. Whereas what we're telling you is live day by day by day by day. So there is nothing delayed about the numbers we're giving you. It's pure live information. And what we're seeing and what we're telling you is that on a weekly basis, the market is buoyant and hot, we could say, and the numbers carry on going at a higher rate than we've seen for the rest of the year. And that's pure reflection of what we're seeing as valuers, what the agents are seeing, and what the conveyancers and legals and the banks and the lenders are seeing. On the right-hand side, we've got the monthly figures. So it's really good that the September monthly figures have now been completed. And that's more for the private banks or the retail lenders on the call that do maybe the bigger ticket stuff. So this information is more based on the 2 million, 3 million, 5, 10 million plus. And what is interesting to see there, the change isn't so great, but what we have seen is the highest numbers of the entire year for the 2 million plus, the highest or second highest, virtually highest numbers of the year for the 3 million plus, and a small drop for 5 million and a small drop for 10 million. So I think that also lines up with what we're seeing. We're seeing 2 to 5 million, a lot of volume, a lot of activity in terms of new transactions and new purchases. And I think that just sums up what the September data in Intel tells us. We're seeing that in terms of the workload and volumes, and the pure data in Intel is absolutely telling us that 2 to 5 million range is seeing more interest than it has done in the rest of the year. And that is something to watch, and we will keep a track on that for you. So the data is strong, the data is positive. It's what I've been telling everyone for weeks, and we just have to continue looking at it and make sure that that's where it's going, or if there's any sign of a drop or a tail off, that we can let you know straight away so that you can manage accordingly. Now, I think that, I don't know if you want to add anything onto that, James.
Yeah, I was just going to quickly add in, obviously the data for the past week is very positive, and we're comparing that to the sort of Q1 of 2020, which I think if we cast our minds back, it was actually a very positive start to 2020. The housing market sort of came back after Christmas, very positive, and that was performing far better than much of 2019, I think, which I'll just add in there.
I completely concur, James, and I think it's a message that we continuously put out there. I think it gives a really good perspective of where we are now and where we're heading. And I think I really don't think this was expected, and a lot of the commentators and the economic viewpoints of the housing specialists and the property specialists and the risk specialists wouldn't have expected to be where we are at the moment. And I suppose that the question mark is just, does it have legs? Is this going to go on for another few months, or if there's going to be a further lockdown until then, or until the stamp duty window expires until then? And then I think that perfectly leads us on to the latest possible incentive being brought into the market following the government's proposal of really incentivizing first-time buyers at 95% LTV level into the market. Very, very hasten to say, very Thatcher-esque in its thought process of trying to fuel the economy through property acquisition. Anything on that, James?
Yeah, a few things to add. It's obviously pretty hot off the press, this being announced just in the last day or so. Basically, as you say, the new government initiative that they're working on, and the finer details aren't quite there yet, but the notion is that there'll be a 95% LTV mortgage available for first-time buyers, and some of our questions are maybe how that's going to sit alongside the Help to Buy scheme, which is largely tailored in pushing the new build housing stock in the UK. So it's going to be interesting how that sits alongside what the differences are between the current Help to Buy scheme.
Something to really look out for. I understand the intent of the government of wanting to drive the economy through the property market, which I say is positive. The reality is that at some point it does create a bubble, and we all know what happens in the end with bubbles. So I definitely would be promoting fueling the economy through the property market. What we would want, I suppose, is a controlled manner from a risk credit lending perspective. You don't want markets to get out of control to the point where the disparity from a boom and a bust point of view is wide. So I think definitely positive that the government is so interested in using property and lending as the way forward in fueling the economy. Caveat, it needs to be responsible lending. So just to wrap up that intel and data, the numbers are strong, performance is strong, slight slowdown in instructions, but the sales figures continue to be robust and buoyant. And again, we must watch that space. A couple of specialist areas that you're asking questions about and are repeated themes that we want to go into further detail on. It is the home counties market and what's really performing well, and go into a bit more detail in that. So we're looking to do a special on that. EWS1 and cladding is a question that is continuously asked, and what our views are and how we're looking at it and how we're analysing that information. A lot of contradictory reporting, lack of consistency or clear message. Definitely think I'd like to bring in a specialist on that. It's a subject within itself. Many of the lenders have asked us to either have a call directly or have contacted us or emailed us directly with a viewpoint to get a bit of consistency. So I do think that's another path for us to go down, and I definitely feel that we should spend some time on that. Other specialist areas are where are the prime and super prime transactions happening and coming from? Are they UK, European, or Asian, Far East investors or Middle East? And I think something I've said in previous weeks, we're seeing maybe the top 5 postcodes not trading as well in super prime, and the data just shows us that. And when I say that, I say in volume, because people are just not able to get into the country or travel as freely. But then I suppose a little bit of a donut effect. Postcodes 5 to 15 are trading tremendously well, and that is because they're the less densely populated locations that have the outdoor space and the major parks or the villages in London, and they have bigger exposure to your UK, European investor or purchaser able to enter into the market. And again, that's probably another conversation. And then maybe some of the specialist areas where a lot of you deal with, being the HMO market, the buy to the rental market, the build to rent market, specialist investor or rental marketplace. I think that's a conversation within itself, which is relatively buoyant at the moment. And I think you can break the market into 4 areas, and it's probably our core base of listener that you fall into these categories. You've got retail, what I call retail factory lending, which is your high street lender. You've then got your private bank lending, and you've got your challenger bank stroke bridging finance, and then you've got your commercial lenders. And out of those 4 areas, I would say the ones that are really proactive and currently pushing product in the marketplace is the retail high street lender, along with the private banking lenders who are really pushing their prime and super prime on the back of this buoyancy. And then within the bridging or the challenger or the commercial lending market, it's all about which level of exposure you have to which areas and specialisms to see how much you're entering into the market and where the buoyancy and the performance is. So if you're doing, I keep repeating the HMOs, but it's a real performing sector, and then you're seeing a lot of activity. If you're doing high street retail, then the activity is really slowed down. So there's a real breakup of how much money is going into the challenger bridging and the commercial lending market, depending on the areas and specialisms. And that's a focus and probably a session within itself. So what we'll be looking to do, I think James wants to quickly touch on that subject.
Yeah, so just to bring you a few sort of deals of the week in terms of prime central London, we've had a Upper Phillimore Gardens trade just end of last week at approaching the £30 million mark, which is just under £3,300 per square foot. Upper Phillimore Gardens being a non-park fronting sort of prime West London house. Just in terms of another scheme with good sales, in the number 1 Grosvenor Square super prime development by the Loader Group, there's reportedly been £150 million worth of sales in the last 6 months. So some really positive transactional evidence there coming out of the sort of super prime London.
Excellent. And further on the specialist area and some of that information, James, I think we'll be looking in the coming weeks to bring in some specialists for some of those areas, whether it's a build to rent specialist or an EWS specialist. I think that some of the questions and the areas that you want to go down within this 20-25 minute slot actually warrant a conversation within itself to go into much more detail over the pertinent hotspot stroke subject matters that are affecting the market. And I think product and pricing can come into that. So yeah, just want to add 2 or 3 points on that, James. It'd be great.
I think this follows on very well. If we take the build to rent industry, one which is seeing significant financial investment and has really grown in the last 5 years. And it follows on. I mean, whilst the government, there are initiatives currently in the offing for enhanced home ownership, the build to rent market really does fuel the generation rent market, of which there is surging demand as ever. I note that there's a new £80 million scheme that is undergoing construction, being announced in Barking recently, which will see another 200 flats available for rent there. I mean, some of the sort of key players in that build to rent market have got the Sigma Capital, Delancey, Essential Living, Quintain, Greystar, London L&Q, London and Quadrant. So in the coming weeks, we're going to be doing a special show on the build to rent sector and bringing some other industry specialists there to give us some more insight and flavour.
Excellent. Thanks for that, James. Thanks for all your questions, by the way, that are coming through. So to wrap up where our data and intel, what we're seeing on the market is today, before James finishes with some final points and your final questions, the continuous trend of buoyancy. We're going to get these September figures through in the next week or two from the mortgage approvals for September 2020, and I'm very confident that they are going to break records. I'm very confident that we're going to see 15, 20-year records broken, and we're probably going to be back at the kind of levels that would have been last seen in 2006, 2007, which on one side is tremendous for business, sales, lending, all the financial institutions. And then for the risk and the credit people on the call, it's just how you're managing your exposure and your risk to that in a prudent way to protect the bank and the lender from what could be the possibility of a downturn moving forward. Obviously, we hope that that isn't the case, and the economy fueled by property and lending and finance is robust or can manage the storm of what is going to be a challenging 6-month period. We know that COVID is going to be a winter 6-month process now that is going to be very difficult for all of us, both to carry out our jobs and for the economy and industries to work. At the same time, we need to be positive and at the same time practical and realistic to understand that if we get through the next 3-6-month period, which is the winter and the spring, and hopefully the damage, both economic, financial, and health-wise, is as limited as it possibly can be, then hopefully there will be some green shoots to look forward to in the spring, and then there's stimulus and the government intervention beyond what they're already doing into finance, lending, and specifically the property market will see us through to a better 21 as the year goes by. Now, that's a moving piece. What I would like to share and say that from where we started out back in April with the show, and we're now 6 months in, I feel that we've managed, hopefully, your expectations in terms of the moving platform that we're on. We definitely can't see into the future. What we can do though is understand the trend of today, share that with you with that insight on the back of circa the 30 years and 3 decades of intel and knowledge, and then try with our intuition and feeling express what's going on so you can manage your books and your lending accordingly. So I'm really confident about the information, the data, and the content and the value that we're adding. I feel it's really strong and enables you to make really good decisions. At the same time, it's a moving piece, and what we're trying to do is move with that piece and give you the up-to-date information. Last questions and to wrap up this week, James.
Yeah, I was just going to come back to the EWS1 form question, which obviously has massive impact for the market. It's had far-reaching impacts on homeowners and lenders, and possibly sort of furthermore where there's been existing lends on flats which have been subsequently affected by the absence of being able to obtain the EW1S form. And there's obviously very strict guidance on when these are required, and without that a lot of lenders will then rule out the mortgageability of that flat. And in the last 6 to 9 months, we've actually seen a very small but sort of emerging market as some of these flats have actually traded, and there's been some challenger banks which have lent on those flats which are affected by the absence of the EWS1 forms. And this has come about where there's been a discount and actually transactional evidence of cash purchases of these flats, which is an interesting one to monitor. And I think that's happened where there's been a bit more certainty, when there's been sort of specific costs to replace the cladding all teed up, and there's a bit more clarity starting to come to the market. But obviously there's a shortage of the assessors to undertake these EWS1 forms, and also we've got to make sure that the sort of fire certificates and all the health and safety and building regulations is up to scratch on all the existing, but also the sort of new housing stock, blocks of flats which is coming to the market.
Brilliant. Thanks for that, James. Just to sum things up for this week, any of you, I know loads of you, write, email, DM, follow us on YouTube, Instagram, LinkedIn, all of the platforms. Where you require more data, special information, I know a lot of you feed up this information to your own internal reporting, to your boards, to your finance committees, your lending committees, etc., etc. Any of that information that you need that we're not currently providing or you want more of, please reach out and we'll do our best to help you. That's what we're here for. Right? We're the platform for you to give you whatever you require to run your businesses, your lending products, and your finance houses, however you do. Thank you for watching this week. Really look forward to next week. Have a safe week. Look after yourself. Take care. Hashtag AskRobCo every Wednesday, 1 p.m. Thanks, James. Thanks to the team for organising. Everyone take care, and we will see you all next week. Thank you very much.
Thanks very much, everyone.